If you're looking to relocate to the greater Phoenix area, should you rent or should you buy? Or maybe you're currently renting and you're wondering, am I just throwing my money away? With high interest rates, higher rents, and even increasing inventory, what's the best move for me to make in 2025? Rent or buy? That's what we're going to cover right here, and the answer just might surprise you. But first, before we get to the rest of this video, if you just want to have a case-specific conversation about your specific situation, give us a call on the information below, 480-660-5974, or check out right here our 450 plus 5-star Google reviews from clients who have worked with us in the past. This is a question that we get all the time. People want to know what's best for their financial situation, both short-term and long-term. And while no one has a crystal ball, it is relevant to ask this question. Why? Because home appreciation in Phoenix here continues to increase. Yes, that's right. Even in today's market, prices are increasing, at very worst, holding steady. Even as supply increases and demand stays fairly low, the median home price continues to hold steady at $460,000. That is a sharp change from the median home price just 4 years ago, which is $304,000. Now, on the other side of the coin, you have rental rates. And what have they done over the past 4 years? Well, as you can see in the graph right here, in March 2020, the average rent price per square foot was $1.01. Today, it holds steady at $1.37, with an average number over the past 2 years at around $1.36 a square foot for most places across the valley. Now, as you can tell by that line graph, rental rates have increased dramatically over the past 10 years. But over the past 2 years, they have leveled off and they are pretty flat, holding steady. So that gives some predictability for investors or even renters to know that hopefully your rents won't go up. That being said, that doesn't stop landlords from trying to increase the rent. In fact, most landlords do have rent accelerators in the lease agreement that you first sign that guarantees that every year the lease will go up, on average about 3%. So both have gone up, rent prices and home appreciation, over the past 4 years, a lot, and especially over the past 10 years. But what is best for you moving forward? Are we going to have a dip in one of the two, or maybe both, or none at all? And that's what we're deciding today. So you have time value of money. $1 today is worth typically not as much as $1 tomorrow due to the one thing that we're all fully aware of now: inflation. Now stay with us to the end, because we're going to give you the buy versus rent calculator, so you have access to that to plug in your specific numbers of what you might be looking to buy or rent, and see what it says in terms of what's best for you from a strictly mathematical situation. You don't want to miss out on that. Now let's focus on the pros here for a minute. So when you buy a house, you have certain pros. Some of those pros are going to be that you're building equity over time. You also have a fixed monthly payment with a fixed rate loan, assuming you have that, which is one of the best tools you can have as a hedge against future inflation. Why? Because it's fixed for 15, 20, or 30 years. You also have potential tax benefits that we'll get into in just a second, and freedom to personalize your house and make certain investments into it so that you can make it exactly how you want it to be. Now, on the flip side, when renting, here are your pros. You have flexibility. You have no long-term commitment, typically longer than 12 months. You have no maintenance or property tax headaches. That's nice because you can just call the landlord if something's wrong and they will be responsible to fix those issues. It's easier if you're unsure about your specific future situation, like maybe a job or relocation. And of course, last but not least, in many cases, lower upfront costs. So as you can see by these lists, there are benefits to both renting and buying. It really just depends on your specific situation. Now let's actually pivot and give you a real life example of a property that you could choose to buy, or maybe one like it that you could rent in the same neighborhood, and see which one has the best numbers. So here's a property that we at Cook & Associates Real Estate Advisors are actually selling right now. This home just came on the market, and this is 1975 East Sunburst Lane, Tempe, Arizona. Now, if you want to purchase this property, give us a call. We would love to chat with you about this at any point. 480-660-5974. Now, if you chose to purchase this property, there's many different financing options you could choose. First of all, you could go, I guess, all cash if you wanted to do that. There are plenty of people buying cash in the Phoenix area today. But if you're financing, there are different down payment options that you would have. The most common would be maybe 20% down to 10%, 5%, and even some 3% or 3.5% options with this property. But for the sake of illustration purposes, we're going to do just one scenario, and that's going to be with 20% down. Now, if you put 20% down on this property, you'd be financing $504,000. Now, you have to have $126,000 in the scenario to put down, hopefully saved up. But again, if you don't have that kind of money, you can still buy a house. Your payment is just going to be a little bit higher because your loan amount will be a little bit higher because you're borrowing more, because you're putting down less. Now, if you're borrowing $504,000 on a 30-year fixed loan at today's rates that are roughly around 6.75%, that will give you a monthly principal and interest payment of $3,268.93. Now, the exact property taxes on this specific property are $222.41. And for homeowners insurance, we're going to guesstimate about $150 for this property. That brings your total monthly payment to $3,641.34. Now, this specific property does not have an HOA, homeowners association, so that is zero. Now, if you did have an HOA, you have to figure that into your payment overall for your monthly expenses, along with the fact that if you had pool or pool service, which you don't in this property, there is no pool, but there is landscaping that you may choose to have someone come by and do your maintenance on landscaping once every 2 weeks, or maybe once a month, or maybe you do it yourself. If you choose to have someone else do it, there's a fee for that. You have to factor that in also. Now, if you bought this house at 20% down, your payment would be $3,641.34 locked in for the next 30 years. Now let's go to the other side, which is renting. Now, in this situation, if you rented a house like this in this neighborhood, your market rent is going to be around $3,200 a month. Here are the best 5 properties that are currently leasing in the last 6 months in this subject neighborhood. Now, some of these properties are a lot smaller than the subject property that is on Sunburst, and so you can see that the average market rent is going to be about $3,200 a month. So now that I know my comparisons of a like kind property, now I can take that to our rent versus buy calculator, plug the numbers in, and see what it spits out in terms of, from a mathematical standpoint, what is best for my situation in this scenario if I want to buy a property in this neighborhood for around this size. So as you can see right here, I put the rent at $3,200, which is what the market rent would be for a property like this. We have a chance to put renter's insurance and rent increases. We also have the chance to put the purchase price of the property, the down payment, how long it is, the interest rate, closing costs associated with it, and it even takes things into factor like home repairs and maintenance, selling costs, home appreciation at 3% per year, and things of that nature. As you can see at the bottom, they have all the initial costs totaled here. And overall, in the first 3 years, renting is actually cheaper than buying, to the tune of about $36,000 in this specific example. And you can see it all broken down right next to that. Now, in this scenario, the calculator would tell us that from a mathematical standpoint, in the first 3 years, renting is cheaper. It will save you some money. But it's kind of like the tortoise versus the hare. Renting is kind of like the hare, and owning a home definitely is like the tortoise. Now, if you live in an area like Phoenix or maybe South Florida or Southern California, it can actually feel sometimes, even by owning a home, like the hare, because home appreciation actually occurs a lot faster than other places like maybe the Midwest or the Mid-Atlantic parts of the country. But I think before we come to the conclusion that renting is definitely going to be better in this situation, we need to look at a few more things. See, at the end of the day, our best advice to our clients is, what is your exit strategy? It really depends on that. In other words, if you don't plan on moving anytime soon, then a lot of times buying will be the better play, generally speaking. If you are unsure about your short-term plans, then renting a lot of times can be the best bet for you in that scenario as well. But one of the big reasons that homeownership could be better is for tax benefits. So let's go over quickly the things that you can deduct and cannot deduct when you own your primary residence. You can deduct your state and local real estate taxes subject to a $10,000 limit. You can possibly deduct home mortgage interest within the allowed limits, and you have to itemize your deductions to deduct home ownership expenses. But here are some of the things that homeowners cannot deduct. Depreciation, the amount applied to reduce principal of the mortgage, wages paid to domestic help, the cost of utilities, most settlement or closing costs, forfeited deposits, down payments or earnest money, internet or Wi-Fi systems or services, homeowners association fees, and home repairs. So there are a lot of things that you cannot deduct. There are some things that you can, and therefore you get benefits owning that home that will help potentially offset some of your tax issues and therefore keep potentially more money in your pocket. And another huge thing is net worth, guys. So over time, net worth should grow if you own assets. Well, a lot of people choose to own real estate as an asset to help grow their net worth over time. And real estate, because it's such a great tool for that, it does allow homeowners to have a big disparity, a big advantage when it comes to how much net worth a homeowner has over a renter. In fact, a study was done 2 years ago that showed that the average net worth for a homeowner in America was around $400,000 in comparison to the average net worth of a renter in America was just $10,400. This is an average net worth 40 times greater for a homeowner than a renter. So if that's not the most compelling argument in this entire video to understand, I don't know what is. But wait, there are two more things I want to talk about real quick, and that is home appreciation and equity buy down. You can't do a comparison of rent versus buy without talking about either one of those two, because when you rent, you have none of those. When you buy, you have both of those. So let's do a quick example on that right now. So for the same house on Sunburst Lane, you bought it for $630,000. If you factor in a simple 3% appreciation rate every year, then after year one, the home is worth $648,900. After year two, $668,367. After year three, $688,418. After year four, $709,070. And after year five, $730,342. So from initial purchase price of $630,000, that gives you home appreciation in just 5 years of about $100,000. Now, over those 5 years, you were making your monthly mortgage payment, and that did what to your principal on your loan amount? It brought it down to the tune of, over the course of 5 years, the principal reduction, not interest, the principal reduction alone equates to about $33,000. So if you take the home appreciation of about $100,000 and you take in the principal buy down of about $33,000, that gives you a total benefit of $133,000 in just 5 years from owning your home.
But wait, Kelly, you had to make monthly payments whether you rent or buy, and the monthly payments for the rent were cheaper, so you paid more over the course of the 5 years.
Yes, that's true. In fact, the net difference that you would have paid owning a home over the course of 5 years would be $26,460 more over the course of 5 years than if you were renting, as you would have saved that money in your pocket. So in this scenario, you'd actually be paying $26,460 more to get the benefit of $133,000, which gives you a net benefit for owning this house as opposed to renting a house in the same neighborhood that's very similar of $106,540 in just 5 years, with using, I think we all would agree, pretty conservative numbers. And that's just in 5 years. What if you held that property for 10 years, 15 years, oh my gosh, 30 years, and your loan was completely paid off? Now, I know it's not that realistic because I know most homeowners move every 5 to 7 years in America, but that's why I want to give you a simple 5-year perspective from that standpoint. Now, I hope this is a lot of good information to help you get some good details on how to make the best decision possible for your specific situation. Renting or buying, neither one is right or wrong. It's just what's best for your situation at this time and looking into the next midterm or a long-term plan for your specific life. Obviously, owning homes and multiple homes in my scenario has done wonders for myself and my family and their future legacy, and I couldn't be more happier with the ability to be able to buy properties that I live in for my family and own them, and of course own multiple rental properties as well. It's just a phenomenal way to build wealth. And again, if you would like to have our rent versus buy calculator and access to all of that, we'd be happy to send it to you. Just give us a call at 480-660-5974 or book a time in our Calendly link below in the description, and we'd love to hop on a Zoom call with you for 30 minutes and just go over your situation as well. And if you like this video, check out this video right here of the 12 things that no one ever talks about that everyone should know when moving to Phoenix. Don't forget to call me.